Good morning, Mr. Chris Doornbos. Thank you very much for doing this. I really appreciate your time.
Yeah, I'm very happy to be here. Thanks for having me.
For the listener, you are the CEO of E3 Lithium, but to get it from the source, what is E3 Lithium?
We are a lithium development company. We're based in Calgary here. The synopsis of the story is basically we're repurposing this very historic Leduc aquifer that we've probably all well know in Calgary, and turning it into a lithium producer.
Where did the name E3 come from?
Originally, it was the lithium's the third element on the periodic table, so that's where. But the synergy of the E and the 3 and sort of like the next generation energy was sort of why we stuck to the name. But the original concept was third element on the periodic table.
So today we'll cover all things lithium, including your advertising budget, which is originally how I found you guys with your ad on the Trans-Canada Going West. So
Yes.
It's working.
Yeah, that's great. Yeah, we that was a small spend for, I think, big reward. The ROI on that is definitely pretty huge.
How'd you get into the lithium industry and why?
It started in 2014. We were looking for projects. I was living in Australia at the time, and we were looking for projects that were part of the energy transition space, but as a mineral developer, that really meant like copper and lithium and some of the other metals to get into it. And really was on sort of like the impetus and the rise of the battery. And the amount of minerals that go into these batteries is pretty significant. And the one thing that set lithium apart from the others, copper, for example, is there's a huge market for copper. But every new ounce of lithium for the battery industry needed to be brought on from new supply. And we saw an opportunity there that, we had the investment of capital had to come into lithium regardless. And so it would provide an opportunity to go find some really good deposits. So we spent 2 years scouring the sort of normal lithium areas looking for lithium projects. And a friend of mine that I went to university with and I were sitting down for a lunch, as you do in Calgary. And we're chatting about all of this stuff. And he pointed me to some information about lithium in Alberta. And we noticed a large gap because normally lithium in Alberta had been developed by mineral companies.
Mm-hmm.
And if you took an oil and gas lens, because we operate like oil and gas more so than we do mineral, there's a lot of lithium, the Leduc aquifer, significant size of it that had been overlooked. And that was sort of the impetus to E3, was that we saw this opportunity, we saw this fairly significant land holding that was available to quote unquote stake, as you do in minerals. And so we went and picked it up in 2016, and that was the start.
Originally, you're a geologist by training, if I'm correct.
That's correct.
Where'd you go to school?
U of A.
And what was your first jobs out of school? How'd you get into the sector and whatnot?
I avoided oil and gas, the oil and gas industry to start off with. I really loved mineral development. I loved I was young, I wanted to travel. And so the appeal to me was getting out into the wild parts of the world and seeing places I haven't seen before. So, and that sort of drove me into the mineral side of things. And oil and gas, a large part of those jobs are Calgary focused, office focused work. So, I started working in copper. I worked in northern BC. I worked in the Yukon in gold exploration. Mm-hmm. And a bit of time in Australia. And then I got an offer to work for Petro-Canada. And the offer was too good to be true. It was working Fort Hills in Petro-Canada's early days of Fort Hills and really trying to develop a new team to do it. Because it was mining. And that was what really attracted me to it because it was creating a way to do it better. We had this really awesome team and we're trying to develop it. So I got pulled into Petro-Canada and then pulled into Suncor through the merger in 2008 and spent 5 years in Calgary doing that. And then I ended up back in Australia went back to minerals in 2011. So I've sort of been straddling both sides of, the sort of the geologic hemispheres of oil and gas and mineral development.
Took your skills from hard rock and soft rock into the lithium project now, more or less.
Well, and I think it did set me up really well to understand this project because I could understand the production of fluid, which is what this actually is, but having the mineral background, the industry is very different. How you fund mineral projects is very different. How you permit them, all of that sort of stuff. So that sort of gave me that advantage to be able to play both sides of that.
You started E3 Lithium in 2016, if I'm correct. What motivated you to start it? You kind of touched on it, but how did you spot the opportunity?
I think when we first staked the bit of land, which is now the heart of our Clearwater project between sort of Innisfail, Olds area. At the time, lithium was just becoming a commodity that everyone was recognizing was needed. And so we had a really good opportunity to get this thing going. And, with anything that you develop, and this is true in any industry, and those people in Alberta who have built companies on the back of one well understand this intimately. The requirement for funding is paramount to your success. And you get up the best project, but if you can't fund it, it doesn't really matter how good it is. So we spent the first year defining how and looking for the funding to build this project. And that led us to the Toronto Venture Exchange. And we started in Calgary for a year trying to find private capital, like you would if you're sort of an oil and gas startup. And it wasn't the right time in Calgary in 2016 for capital. And it was a hard sell. Mineral projects weren't typically funded out of Calgary, even though this was an Alberta project, even though it had all of those oil and gas sort of earmarks, it still was very hard to fund out of the Calgary funding ecosystem. But minerals are funded out of the Toronto Venture Exchange very, very effectively because the high risk capital likes being public because there's liquidity there. And so eventually, through some contacts in Calgary and some contacts in Vancouver, we did a reverse takeover of a publicly traded company and became public in the end of May 2017.
How did you spot the opportunity for the lithium rights that you found? Where did that originate from?
There was a paper written talking about sampling wastewater across Alberta. And I think it was 2010. I can't remember the authors, but they went around and they sampled a bunch of wastewater in Alberta, in the province, and lithium was found anomalous in the Leduc. And so using that paper, a couple of companies before us had looked at some ground up in what is now Fox Creek, held by another company. And but the people that were using that report to find where lithium was were looking at it from a mineral perspective, which is that you're sort of normally stake squares around your known sample point. But we understood where their aquifer was. So we ended up seeing that a lot of people, well, everyone had missed this land that was basically south of Edmonton, north of Calgary. And from my perspective, having mainly developed major projects, if that's my background, is more so taking projects once they're sort of found and understood and developing them into an actual operating entity. That logistics are always project killers. Things like permitting, things like access to power. These things really, when you get to that later stage, they can stall or kill projects. And the one thing that this area in Alberta has is a well understood industry backbone from the Leduc in the 90s in this area was producing more water than we will produce in our first project, trying to get oil out when it was held by Imperial. So, we understand how to do this, and with power and with workforce and all the things that are in this area. It really spoke to me in terms of like it had all those things. We're ready to go. We just needed to develop a technology. We needed to prove how we could get the lithium out of the water. That was the only missing piece. And to me, I saw that as an engineering challenge. But we knew the water was there. And usually with geologic projects, the unknown of the size and quantity of the resource is usually your biggest risk factor. And because we had all the data, we were able to see the size of this and that it was big enough to go.
Maybe we'll get into the characteristics of the brine reservoir that has the lithium, but to go back for the listener, what is lithium?
Sure.
And why is it important nowadays for battery construction? Why are you targeting the commodity?
I think the lithium is the one element in all of these batteries that remains consistent. So in batteries today that you find in your cell phone, in your computer, in scooters and cars, and in battery backup systems that are running, like the big energy storage systems, lithium in all of those battery types, whatever chemistry the battery is there's about 10% quantity of lithium by mass. And what the lithium does is it's actually the conduit that the electron transits on. So when you're powering a device, the electron is immobilized. It's not actually moved by the lithium, but it's mobilized by the lithium in the battery, in the chemistry. And I'm not a chemist, and it's been explained to me by we have a partner, Pure Lithium, and they have some very smart minds. So it's been explained to me how it's a bit of a shuffle when the lithium molecule comes in. It allows electrons to come off of the cathode it's sitting in, and those electrons power a device. And then when you charge it, you push those electrons back to their home. And that enables you to power things. And that's fundamental. And it is the lithium that enables it. And the other piece that lithium brings is a much higher voltage potential. And so for the electricians in the room listening to this, if you want higher power, you need higher voltage and higher amps, right? So if you have a higher voltage potential, which lithium inherently brings, without any changing to any other metric, you can get more power. And so a theoretical power from a lithium-ion battery is higher than any other chemistry. And that's why. So you get bigger bang for the same cost.
And it's better than another commodity like silver, copper, anything like that. It's just better, more or less.
Yeah, like the competitors to a lithium-ion battery, like a sodium-ion battery. Sodium-ion batteries have they sort of work in a similar way, but the voltage potential of sodium is much lower. The holy grail is, in my mind, is based on what we know today. And of course, people are doing technology innovation all the time. But based on what we know today, I'd say the holy grail is what a lot of people refer to as solid state batteries. But basically, it's lithium metal in the anode side, and that's your source of lithium in the battery. And there's a lot of advantage to that. But if you can do it, if you can manufacture the batteries for a similar cost, you get a much higher energy density. And the biggest challenge with batteries today is the cost per power. That's how the metric that they look at everything. And if you like to make an EV cheaper, you basically want more power per battery, because the cost to manufacture that battery is about 75% of the cost. And so where your margins really lie is either making your battery manufacturing process cheaper, which everyone's trying to work on, but also trying to reduce the cost of your material. So that means that cell is cheaper to manufacture. But if that same manufacturing cost comes at a higher power density, then you need less total batteries. So your total power in that car comes at a lower price because you need less batteries in it. And that's sort of the next, I would say, Gen 2. The Gen 1 batteries, I think I would still classify as anything with a salt cathode, which is, you hear names like LFP or NCM. They're all sort of a salt-based battery in a cathode sense, with a graphite and sometimes silicon anode. Where we're moving to, in my mind, is, at least from what we see with the current technology developing, is that lithium metal anode, which increases the energy density, which enables higher power for the same cost.
Lithium is found underground, which is what E3 is about, is finding and extracting it.
That's it.
For the listener. And it just so happens that a lot of it is currently located in brine resources in the Alberta oil fields.
Yes.
So what is a brine formation or resource, and how does that work with the lithium?
So traditionally, lithium, before these styles of projects were looked at, traditional lithium was one hard rock mine in Australia called Greenbushes, which was very, very high grade, and it's still the highest grade hard rock resource on the planet, that one mine. And that was it. The rest of the lithium came from evaporation ponds in South America, where it was made as a byproduct to things like potash. So they'd evaporate out of the water, would come some like sodium would come out, and then magnesium and potassium, which is potash. And then eventually these companies were left with this final product that had a lot of lithium in it. And so they refine that lithium into lithium carbonate and sell it into the market for things like glass, like Pyrex has lithium in it, or pharmaceuticals. With the advent of batteries, a lot of these companies have shifted focus to lithium. So SQM and Albemarle sort of focused their business more on developing the lithium asset. But along that, while that was all happening, companies like us looking at this from the lens of, we can't evaporate in Alberta. These are brine resources. How do we get the lithium out? And so The opportunity in Alberta is that, this oil aquifer, the Leduc, actually contained very little oil relative to the amount of water. And the lithium is dissolved in the water. And so for this style, which, there's several different names, we use a technology called direct lithium extraction, which is sort of a big garbage can term for a process that enables you to take the lithium out of the brine without having to evaporate first. Most of the world has landed on some sort of solid liquid separation system, like an ion exchange or sorbent, like a water softener, is a good proxy to taking out lithium from these waters. So that process enables you to not have to use evaporation, but still go after brine resources. And so that's the class of resource. And we would call this like a geothermal brine. So usually they're deep, they're warm. Some are warm enough to generate power. There'd be high temperature geothermal, and some are not hot enough to generate power. So that's where we sit. It's low temperature geothermal. And there's huge advantages because these resources are fairly big. Like the Alberta contains the third largest lithium resources on the planet. Bolivia, Chile, and then Alberta. And so the size of the aquifers here are big. The lithium content is significant. And we have infrastructure and the skill sets able to go after it.
For the listener, in simple terms, a brine resource is saltwater underground that has lithium within the water that you need to get up and out to the surface, I think, more or less.
Yeah.
And you got to separate out the lithium, and you end up with a silvery metal at the end of the day, which you sell?
Well, we make a salt. So we make a lithium carbonate is what the first plant will make.
Okay.
So, but it is a salt. It's like calcium carbonate. It's like what you would eat in Tums. Like it's just a white powder effectively.
And at the end of the day, do you have the lithium that you got to get to market then? How does that process work?
Where do we sell it, do you mean?
Yeah.
One of the advantages to Alberta is that we make the battery salt here and will in our commercial plant as well. So we can sell directly to battery manufacturers. Most lithium in the world today, if not all, like there's very few examples where lithium produced at the mine or project site doesn't go somewhere else for secondary refining to make the battery products. And because the market by the end of this decade will be about 92 to 95% batteries for lithium, you really need to focus on that refining stage. And a lot of the focus, because right now China has the majority of the refiners. They're very good at building these machines that refine the lithium, either from hard rock or industrial grade products like carbonates. And so the majority of the lithium today for batteries comes out of China. And so do the batteries. I mean, they make the best batteries, I would say, on the planet today. And so when you're looking at domestic sources or domestic supply chains and trying to build a domestic battery industry, you need domestic raw materials to feed your domestic supply chain. And there's been a lot of sort of deglobalization on that front. It's why at the G7, one of the first bullet points was talking about, building domestic supply chains for critical minerals because of, the need to build these supply chains locally, or maybe the desire is probably a better way to put it. And so being able to refine it to that final product locally eliminates another step in the process, enables us to sell directly to customers that would be buying it here in North America or Europe.
And so when it comes to the service with E3, what is it like at that point?
It's honestly, it looks like just a clear water that's very, very salty. Okay. So it's like the ocean water is 30,000 TDS. This is 220,000. So it's 7 times saltier than seawater. But this water, I mean, when you're producing it for oil, you got the same water out. So we've been producing this water to surface since the 40s when these carbonate platform reef complexes were first discovered. So we understand how to move the water, but it's just water. It's just very, very salty water. And what we do is we go after the lithium. So the technology that we've developed, we flow it through these big columns, and in the column there's these little beads, and they're selective for lithium. So as the salty water flows through these big columns, you pull out the lithium. You get very little anything else out, just lithium. And then you rinse, then you stop the flow of brine, you rinse it off, and that rinsing it off concentrates it. So now you have something that's, 60-ish% lithium, and you're starting at something that's 75 parts per million. So something that's very low concentration, and you're converting it to something that's very high concentration. And that enables us to refine it. So from there, we would refine it into a lithium salt. But that first stage is what we've been working on since 2016 to perfect. That's what the focus of the main heart of our demonstration is that we're running today. All of those things is really focused on getting that product, but then being able to bolt on behind that the carbonation plant and being able to make a battery carbonate is more industry standard processing, but it opens up a lot of doors for the company.
And does that process occur right at the well site? How does that work?
Yeah, everything will be we're currently in design phase. In detailed design is kicking off for a commercial plant that'll start at 12,000 tons. And we've picked up some land for that we're working on right now. We did an open house in that area, sort of east of Olds, and continue to work on the permitting for that site. So we'll probably be submitting our permits here in the next month or two for the operation of that site. And that is where everything will happen. So we'll have well pads, just like you would in a conventional oil and gas play. You'd have wells scattered around where the resource is. You'd bring them all of the fluid together to some central site. From there, we take the lithium out and the water goes back down the pipes and into the ground again. So all of that's closed loop system. And then you have this lithium chloride concentrated lithium product. And then that's where you refine into. So you could think of it as like raw material production and refining built into one step.
And then where does the lithium go from there? Do you sell it into a system of some sort? How does that work?
It's probably packed in bags and shipped by rail to customers.
And are there buyers or sellers or a market? How does lithium pricing work?
That's an interesting, very long-winded answer to that question because it's complicated. It's a new market, and most of the lithium today is sold on direct sale contracts. But the world is the battery world is trying to shake that up a little bit. Most of the prices that you quote are the Chinese spot price because, again, the majority of the lithium is coming out of China. So that's sort of the benchmark price index. But it's not a true reflection of the actual prices being paid because most lithium is sold direct sale. So you don't actually have a clarity into the pricing of what lithium is actually selling for. And it's actually one of the biggest challenges in the market today for lithium is the lack of transparency around the pricing. And it's caused a lot of challenges for companies like us to develop because without a clear vision of what the price is, it's hard for people to value projects, hard to get investors to understand the value of companies. And so the whole industry over the last couple of years has struggled in developing because just on the clarity of lack of clarity on the price. So it's a very interesting challenge that we all look at. But with anything, there's opportunity. And I think there's a lot of movement right now. And when I look at this from the perspective of a mineral developer CEO and how many conversations, how much time we spend with provincial and federal governments on these conversations is pretty significant. Because we are one of the first projects in Canada, which makes us one of the first in sort of the Western world to be producing a battery grade product out of the back door. And a lot of things have to happen for that to be the case. We have to get permits. We have to finish the design. Most importantly, we have to get funding to build this capital project. So all of those things still need to happen, but every other project that's trying to develop also faces those challenges. So, so we end up, because we're one of the leaders in the space right now, and in terms of our time and our development and how long we've been doing this, we end up getting pulled into a lot of these conversations about how we build this market, how we get domestic supply, because it is a very important thing. It's, the United States has talked about it significantly over the past 5 months. There's even an executive order issued in April specifically talking about just critical minerals pricing and how they're going to manage that. And so it is very topical. And I think that there's a lot of movement right now for like a Western G7 plus solution to that problem, because there's a huge desire to ensure that we have the full supply chain, and so for that to happen, in a capitalist world that we live in, you have to have a pricing mechanism that makes sense and that is transparent, and it's to the point now where the Prime Minister and the President of the United States and other leaders are talking about it. So, it's at the top levels right now, trying to figure out what the solution is.
So nowadays you would send it to a commodity broker. Who would buy the lithium from you?
A battery company.
Okay.
Yeah.
Direct to consumer.
Direct to consumer. We've even seen car companies who are a big consumer of batteries invest in the in mineral companies. So a good example is General Motors invested in a Canadian company that has a project in Nevada called Lithium Americas Corp. And I think they're now 38% joint venture owner in a mining project in Nevada. General Motors is. And so those movements are happening because, again, they're trying to lock down price. They're trying to make sure they have price security that makes sense for them, these companies, as well as ensure they have the supply for their own domestic, production.
So if and when E3 starts producing lithium, you'll sell it to the customer, car company or something like that, and they use it for their supply chain. Yeah. More or less. And so what makes E3 different in your extraction process versus competitors in the competitive market?
I think our know-how sets us apart. The fact that we've been doing this since 2016, we're developing the technology. It has changed. Like the strategy has changed. But now, there are vendors who sell this material. It's like a reagent that you would buy for any plant. It basically, you think of it as like a giant water treatment facility. And you're basically treating the water to extract the lithium out rather than, and leave everything else behind. And normally when you're trying to treat water, you're trying to take everything out. But for us, we want the lithium to remain. So that one nuance doesn't really change that drastically your process steps to get a purified water. You're still using reverse osmosis, you're using filtration, you're using conventional ion exchange, things like water softeners to get calcium and magnesium out. So all of those processes that you deploy to clean water, you're deploying for this because effectively you want the purest lithium you can get, because that's what batteries require is a high purity product. And so that the competitive advantage is knowing how to do that. It used to be that there was this black box around DLE, direct lithium extraction technology. And we have developed our own. We have a sorbent that we've patented that's out there that, we could use, but the sort of strategy shift happened when major chemical companies started to manufacture this material, this lithium selective sorbent. And you could just buy it from them without having to manufacture it yourself. And that completely changed, in my mind, the industry. And I think that, going forward, it's going to be much more commonplace to just have an engineering firm you would hire and they would just design you a system. And there are companies now doing that, like big engineering shops that are just, you hire them and they design you a system like you would any other processing equipment. Like normally oil and gas companies or mineral companies don't develop their mineral processing technology. They just hire a company and design a well-known, well-understood process. And so we're not there yet, but direct extraction is getting there. And until we're there, until that happens, you really need to hold that know-how in-house and be able to do some of the process optimization, process design work within your own team, because those people don't exist. The expertise doesn't exist elsewhere. And so that's what we have.
And right now it's in a development phase. When does E3 expect to start producing lithium to make money?
Our goal right now is as fast as we can, but it still takes time. So, we're aiming for 2028-ish, depending on the time frame of permitting and mainly I would say the time frame of us getting the big project financing. It can take some time usually to go and shop your project around when you're ready to get construction financing put together. And if you look at any of the other smaller companies developing big projects, that time frame, and it's sort of like they're piecing it together from multiple different sources to get the full capital stack they need to go and construct the plant. So I think that from a time determining step, that's the big one. I think there's lots of opportunity. I think it's getting increasingly competitive because, again, with this global, Western G7 plus, however you want to put it, push to get critical minerals out of the ground, governments are stepping in. And the United States last week announced $1 billion worth of funding towards development of critical minerals projects domestic in the United States. And so projects now are competing for capital. And, E3 is one of the more advanced. We're not the most advanced, but we're in that pile of we'll be producing by the end of the decade. And there's not that many out there, but we're all still competing for capital. And so when you look at that competitiveness, one of the big things that you see is that you have government stepping in, making other projects, other jurisdictions more competitive with big financing plans. And so it's not normal. That's not something that you would normally see governments doing for any project like this. And I think it's just a sign of the times. And it's sort of the global shift that we all feel. There's lots of other implications to the global shift. But this is the one that hits critical minerals. So, there's a lot of stuff that is sort of being worked on under the surface right now at the federal government level that I think is going to see a big push to get critical minerals out of Canada developed. And we're seeing it because we're providing our sort of opinion on policy and stuff like that into the government to support it. And as that stuff gets developed, it will add a lot of confidence, I would say, to the Canadian industry, because we haven't built a lot of mines in the last 10 to 12 years. So I hope it will add a lot of confidence that Canada's now open for business, and we're gonna build some projects like this. And because E3's project in lithium in Alberta, it's well more in terms of its ability to on metrics like land use and water use and all those things. We do stand out as a project that has a lot higher standards than, say, a hard rock project would. And so we're attractive in that sense from a company looking in at E3 and how are you going to develop your lithium and what are your sustainability metrics. We have a very good leg to stand on there.
So if a private investor was to look at E3 nowadays, what would your value proposition be to them with production coming on the line in 2026? I think the lithium's there, but how do you make money for investors?
Well, in development of mineral projects, at the stage companies are until your revenue as a pre-revenue company, and a lot of mineral companies stay there for a long time. What you're selling is effectively speculation. You're selling management's ability to execute on de-risking the project and get it ready to build and then build. And I think that a lot of the work has been done now at E3 to de-risk the project. And that's the value prop, is that we have the right people in Alberta. We have the right people at E3. We have a largely de-risk project. We're doing our demonstration facility, which would be the final technology sort of de-risk. Working on the engineering, permits are being submitted. So when you look at all those things, all of these activities that we're currently in the midst of de-risk the project. And of course, we have a high degree of confidence that everything is going to be successful. And so if you just take that viewpoint that, we will get the permit and the demonstration will be successful, there's a big value creation opportunity for investors at the company, because we are, by the end of, even this year, but then into next year, as we get all of these things in, this project is getting more closer and closer to build ready stage. And that you usually see in mineral companies a significant value accretion during that time. And then, the sort of next level is that we're off building this. And then, when as a revenue generating company, we're completely different, right? We're not based on that, the management's ability to execute on the vision. We're more based on fundamentals. What is our revenue? What is our annual rate of return? All those sorts of metrics. So, and so right now, I think there's a good opportunity, because the lithium market has been in a bit of a bear cycle for the last couple of years, and we're just starting to see that come out. because the world is trying to really push to get domestic Western sources of critical minerals, and lithium is usually on the top of those lists out of the ground. So I think there's a lot of good markers out there right now that are showing a lot of positivity for companies like E3.
So say 2027, 2028, there may be lithium production, and as a result, you'll have revenue and earnings, and the stock price will move up eventually. Maybe one way to put it to investors?
Yeah, I mean, it moves up over time towards that path, for sure. But obviously the ability for us to create revenue is, again, we're a different company, right? The first project will make, several $100 million US a year in revenue, right? So the numbers are big. Now the capital is the big challenge, right? We have to go get debt to build this project, and that's a lot of the focus. That's going to be my time over the next 12 to 18 months, and we just brought on a new CFO as well. Is going to be working through that, because that is our ability to actually build and finally execute on that. But in the meantime, there's a significant amount of de-risking happens, because we need to do that inherently. Like, we're not going to build this project till we're satisfied with the risk profile of it, which means the technology is demonstrated, the reservoir's got a demonstration, the permits are in hand. We have the security of our ability to execute. But through that also, it de-risks it for investors and whatever else.
But you are the top insider owner of the company, so you have some skin in the game, which is important.
I have a lot of skin in the game, and I definitely, I'm in this to see this thing get built. And I sometimes joke, like, we're either going to build it or get taken out trying. Like, this is, there's enough now in my mind, as someone who's been doing this now for 9 years. And has seen it from the point of view where, like, it was a speculative play with a couple of permits. We had 9 permits. Now we have 70 some permits. We've continually de-risked this. We continue to advance the project. So having seen it from that full spectrum of, like, can I even get a permit to, for just to explore for the lithium, and now to the point where we're, like, on site today. I was out yesterday looking at it. We have a fully functional demonstration system out on site that will take brine from the Leduc and turn it into battery grade lithium carbonate in a fully automated process. That's 9 years of hard work, right, to get to that stage. So I obviously have seen it evolve through time, and that gives me a lot of confidence that we've continually been able to execute and be successful. And it hasn't been easy, and we've definitely made a lot of mistakes along the way, but you learn from those mistakes, especially on technology innovation. Like, a mistake is a good thing. Something that goes wrong is a good thing, because you learn from that. Because you only need one right. You only need one success to get this thing to operate, right? But along the way, you have many, many failures. Trying to test out things that will work, and strategy has shifted over time. And we've always pivoted. We're very nimble, so we've always kept that attitude. Like, we need to be able to follow what's happening in the industry. We need to be able to be nimble and pivot when things change. And technology is one of those big things that we pivoted when it was necessary. Even on the strategy of the size of our first development, we pivoted. We were going to build it a bit smaller the first stage, and then we'll expand once we're in operations to try to lower the initial capital and de-risk it that way. So all of these things, as you go, you're learning, and you're trying to achieve the ultimate goal, which is just really to get something built. Because once it's operating, once the first plant is operating, it proves itself. You're able to finance, you're able to use cap rate to, all of those things change. Now you're able to build and expand. I mean, this thing is, it's big. It's 50 years of operations at full scale, which is about 150,000 tons a year. So, and that would make it one of the largest producing assets on the planet today for lithium. And we're going to start at 12,000. So we'll scale from 12 to 150 over, lots of years, and capital. But, you got to start with the first one.
Lithium is measured in tons.
It's in tons, yeah.
So you sell it more or less on a tonnage sort of rate, I guess, when you do end up selling it.
Yeah.
And so hopefully maybe by 2030, 2029, 2028, somewhere in that range. But what are the biggest technical hurdles that E3 has right now as you look ahead towards that date?
We've done a lot to de-risk the tech, and that process continues. So when you look at the big accomplishments and what we've sort of been able to tackle, it's, we built a lab in 2021, and through various iterations of what that lab has done, we've got a group of people in there now that fully understand how to optimize to get a 75 milligram per liter, a very salty brine, and through process turn it into a concentrated lithium chloride ready to be turned into a battery grade lithium carbonate. Mm-hmm. And that know-how is probably one of the biggest innovations. And that the final stage, so how we look at this from a development perspective is that we would look at a sorbent that's available in the market. We put it through several stages of analysis in our lab, and we get to the point where it seems to be economic in terms of its ability to extract lithium on a per unit basis. It's, we're able to flow water fast enough that the size of the equipment's not too big, that the capital is usable, all these sorts of things. And then it goes into the demonstration facility. And right now we're looking at 4 different companies that provide this material. And so the first one will go into the demonstration facility, and we're turning it on here shortly. So that'll be the first sorbent through it. And then we plan over time to run all of the ones that are available that have passed the first 2 stages of development into the demo, which is the 3rd stage. And so that's sort of where it's at right now. Like the process design with some probably tweaks as we go. We'll learn things through the demonstration. It's a big scale, right? We'll learn things there. The design is fairly solidified. And so, finding a good sorbent, which is the reagent that goes in these tanks, and vetting that through the demonstration facility will really nail down 2 things. One, that, over long periods of time, consistently operating an automated machine, this material stands up to rigor. And you're still getting continued performance over time. And they do wear out like everything else, like it's a reagent, so you fill it up. But that's the other piece of this is then the cost. That the cost of the material and the cost to operate the machine is as we expect it to be. Mm-hmm. And those 2 things are the big sort of question marks that the demo will answer. Obviously, we've done a ton of work leading up to this. And so we have a very high confidence that, of course, this is all going to be successful. We've got lots of data on longevity. We've done all of this work, but seeing it at this scale and operating at this scale does sort of put that final pin in that and say, yes, this is de-risked and we're ready to sort of design a commercial facility. So once the demo is done operating, the next big technical challenge is really the detailed design of the plant. And the process is sort of nailed down, but the final design will happen through starting this fall and into next year. We'll be designing the actual commercial 12,000 ton plant.
But a big chunk of the cap table up to this point has come from government funding. So what would you tell the private investor who is a little bit worried about that fact that I want E3 to survive on its own? Yeah. How would you respond to that question?
It's a good one. We've raised 75 million of capital ourselves, and then we've gotten 42 million from government. I think that it's sort of a double-edged sword from one perspective. The reason that government has supported this is because we unlock a massive opportunity in Alberta. So we've gotten federal and provincial support to mainly focus on getting the technology and the project itself de-risked. Mm-hmm. And the idea, I think, from, I'm not going to put words in people's mouths, but what I hear and why I think E3 has been so successful is that, our success hopefully opens up the industry for everybody. And so if we can get the technology de-risked, and if we can, a lot of our money that we raised ourselves has also gone into technology development that our peers who come after us won't have to spend, right? Because we've had to do the hard yards. And so I think from an investor point of view, it's also been our shareholders' capital. I mean, they put their money into this project over the years. So that capital has gone to advance the project, and the same with the grant capital. I mean, grant is very specific to certain projects. Like ERA funded us $5 million, and that's purely on the demo. And that $5 million gets paid back purely on milestone achievements at the demonstration facility and nothing else. Whereas like our strategic innovation fund pays about 34% of eligible expenditures, and the eligible expenditures are pretty broad. They're everything from drilling wells to the demonstration to the pilot we did in 23. And that was $27 million. That's like the biggest chunk of support we've gotten was that one grant. And SIF through ISED supported that. And we went back and forth on, should it be this part of the project or that part of the project? And at the end, after 18 months of back and forth and due diligence, they just decided to fund the whole thing. And they were, because was it just going to be the technology? Was it going to be the drilling? Was it going to be, engineering? What were we going to cover? And they came back and just said, we're just going to cover it all because it's a package. It's a, the technology doesn't make the project successful in a vacuum. You need the drilling, you need the engineering, you need the whole thing. And so I think that, and when you look at E3 also, that $75 million has got us to the point where we are. We still, and plus the 42, we still have a whole whack of that government support left, and we still have cash in the bank. So, and we've paid for the demonstration equipment. It's on site now. So we've been very good stewards of capital at this company. And it's something that I'm very proud of, that we raised 29 million in 2023. We still have money left, and we've done a pre-feasibility study. We did a whole pile of engineering work. We designed and built a demonstration facility. So we're putting out this capital that we raised and that our shareholders who trust us have given us to good work and achieving milestones along the way. So at the end, even though we've had mistakes and even though we've had challenges and missteps along the way, at the end, we've always found success. We've always overcome. And I think that's a good testament to the team at E3, because we're here now at a place where, we're not done yet, but we definitely climbed a fairly big portion of the mountain to getting this in commercial.
The idea is the government supports the company now, and with the goal at the end of the day that you won't need the government support eventually and can produce and make money on your own.
Yeah, exactly. And that's even like when we're talking to government about the federal government about a critical minerals debt security program to help us get the capital or stuff like that, or whatever the conversations they're having with the G7 on a sort of a price support or wherever that's going to land. Those, even if they came in and they supported E3, right, and other companies, but they supported E3, at the end of the day, again, it's jobs, it's tax, it's royalty, it's revenue, and it's the first one, right? And we get it built, we get it operating, we show that this all can work. There's going to be many, many more of these to come. Alberta is going to be a jurisdiction into itself for lithium production. We'll produce it, at a lower cost base than a hard rock project in Alberta, which is the other major source that's being developed in Canada. We'll do it better from a impact perspective, just inherent to how the projects operate. And I think those things are really going to drive long-term investment in Alberta. And Alberta's open for business. Like, we hear this all the time, and I really think it's true. The entrepreneurial spirit and is strong in Alberta. We have, I think there were at some point 4 or 5 lithium technology companies based in Calgary, based in Alberta. And we don't even have an operating industry yet. And I think it just shows the entrepreneurial spirit of Albertans, and people being able to see opportunity. So I think that's pretty cool. And I think Alberta is a great place to build projects. We build big things here and we execute, and the government's supportive with policy to build industry. They're usually trying to get out of your way, not get in your way. And we're seeing that with Bill 82, that Minister Savage, when she was the energy minister, brought regulatory for lithium, which didn't exist before, into the home of the AR, which now gives us the ability to license. And we're just working through the first facility license under the new directives that were brought in with the AR. And so all of this stuff is the foundation is being built, and I think now is firmly in place in Alberta. And we'll build the first sort of building, first house there, and we'll get it operating. And then I think investors, the industry is going to come here, and we're going to open up the whole thing. And I think that's like, to come back, like the why. Why would government look at this? Why would we support it? Why would government support it? Why would we bring these programs here to get these projects operating? And it's sort of twofold. I think it is because of the size opportunity. I also think because there is a global need to domesticate your mineral supply. And this is a giant theme. And I think Alberta has probably the best opportunity in Canada for lithium to get supply of lithium into our ecosystem, into our supply chain, which obviously feeds the United States supply chain, which also will feed Europe. Europe is resource poor. From that perspective. So there's a big opportunity to sell our product into the European supply chain. And Alberta can do it all.
Yeah. One reason the government supports lithium industry is for the local jobs and whatnot, but another is the national security of lithium control. Why is it important that the Western countries have access to lithium?
Because we don't today. Because Canada has 2 hard rock lithium mines, and that material that they produce, which is spodumene concentrate, is not processed in North America. One of them, at least, if not both, go to China for processing. There is one operating entity in the United States that makes lithium. They make about 4,000 tons. That's in Nevada. So that is the entirety of North Americans' domestic sources. Now, we do in companies like, it used to be Arcadium. It recently got purchased by Rio Tinto. They've got conversion facilities in the United States, so they would make the battery grade product by bringing non-North American lithium into North America and convert it, refine it. Tesla's trying to build a refinery in Corpus Christi. So there are companies out there trying to build that refining and bring in external sources or even local sources in, but we just don't have lithium in North America today.
Which is a big problem.
It's a big problem. It's a national security risk. The United States, obviously, they're very loud about it. The G7 talked about it again in the communique. The one of the first things on the list was critical minerals. It's very topical, but we've been seeing this since 2020. I mean, we've been on trade missions with the federal government all over the world, talking about critical minerals, talking about supply chain. And when people talk about these things, they talk about it in this context of the national security issue. And there's a bit of a trend right now. And again, it's not just critical minerals, from a deglobalization trend, and from the national security lens. If you want to be able to have a battery industry, because as I said, the best batteries today are produced in China, and they are good. They're very good. So if you want, and it's not us thing, it's the governments. If the federal government in Canada, the federal government in the US, if they want to have some ownership on the battery industry, it has to start at the raw material.
The lithium market's been volatile the last few years with a lot of supply coming on, making prices weaker. China has the advantage in that sense that if they want to flood the market, they can, which makes life difficult for North American producers. How does E3 think about that in terms of pricing going ahead?
I think, as I mentioned earlier, it is the biggest existential challenge for a company like us, because we live in a capitalist world, which is a good thing, and we value investment based on their ability to make returns. And so when you can't price the commodity in a commodity-based company, it does make it challenging. I think, though, that there are mechanisms that are coming that are going to change that. And,
futures contracts.
Yeah, well, because even if you're negotiating with a company that's building a battery factory in Canada or in the United States or in Europe, you're still negotiating a price directly with them, right? And whatever price they pay you. But the problem is, where these companies are challenged, is that they're worried if their competitors buy the Chinese lithium at bargain basement below, and most of the lithium today, when you look at, and this is not our data, but you look at the cost curve to produce a battery grade product, a lot of the Chinese supply comes from Australia and Africa. and converted in China. And that stuff is operated at a loss. If you just look at the operating cost versus the price, the spot price coming out of China. So that on spot is operating at a loss. It may not all be actually priced at that level. And again, that lack of transparency is very hard to determine. So those mechanisms, though, when you're looking at the value of a project based on the Chinese stock price, it's not the real price, number one. So what we get paid will not be that price. There is a much higher North American price, and there's commentary from a very smart person out of Albemarle on a podcast that was talking about that, and real prices in North America, even today, with the depressed prices coming out of China, are 15 to 17,000 a ton. So that's almost now a little bit less, but at the time it was almost double the Chinese spot price. So the real challenge isn't so much the price. The challenge is the transparency or lack thereof in actual pricing of the commodity today. But it does have a hindrance. So I think you're going to start to see a lot of push towards price transparency and price certainty in sort of the Western complex to enable projects to get built, because the governments understand this better than we do in terms of what's happening in the geopolitical realm. And obviously from a pricing perspective, we're trying to explain to them the impact to us. And that's what we've been supporting the federal government right now, and even some work in the United States through some organizations that we belong to, is helping them understand the impact to companies like us, that why the price needs to be there and what that does, and what are the impacts of putting this piece of legislation or this policy in place versus that policy in place to support it, and what the pros and cons of those are, so that the right policy comes into form that enables projects. And it's weird because normally you don't have to do this, but lithium is so small, and because it's a mono supply right now, really. It's easily manipulatable. And I think that's the challenge. It's a short-term thing. And I think that's the biggest message we have to government, is that whatever needs to come in place to get this going, it doesn't, I don't think, needs to be a long-term, multi-decade solution. It just needs to be a short-term solution to get a couple projects off the ground and get the supply chain going locally. And then from there on, it'll be self-sufficient and run off normal market forces.
And what's the fear of relying on China? Why is that a problem? If they cut off supply to North America, then we can't make batteries? Is that one reason?
I asked myself that a lot, because
what's the worst case scenario?
Yeah, it never was a problem until recently that we bought a lot of stuff from China, and they make great stuff. And they over the last 20 years, like I remember the first time talking about buying equipment from China, you really had to be careful. Do you get what grade of quality you get? Because a lot of the stuff, especially like machinery, you really had to make sure you're getting the North American equivalent grade, because you could get 2 grades lower than that. And from my perspective, I'm not an expert by a long margin, but from our perspective on the last 20 years, is that especially in the battery world, that has changed significantly. They are experts. They are the ones making the product. And so I think from a global buying perspective, I don't think there's anything wrong with buying products out of China, buying batteries out of China. They're a good price. If we bought EVs from China today, they would be half the price of an EV that you can buy off a lot in North America. So that whole price discrepancy thing would be gone completely. Even if you could just buy the batteries en masse from China today and install them, you could probably get the cars a little bit cheaper than their gas equivalent. So, and that's just from the perspective of the EV market. So, so that's the one hand. The other hand is what you mentioned, which is the fear that sort of if you just capitulate and you let China have that, then do the prices stay where they are, or do they start to go up over time? And then if they start to go up and they start to like for military equipment, or for if you're the United States looking at this, then what happens if you can't get your hands on the product that your society's become dependent on? Then they have control. And I think that's where the fear comes from. And that fear is driving a lot of the movements right now to domesticate. And I think from our perspective, the other side of this is that we are cheaper to produce lithium in Alberta than a lot of the Chinese supply that's on the market today. So if the other side of this is that we don't have a normal market. So if we had a normal market, it would likely be that the cost to buy that battery or that lithium out of China would be more expensive and would make projects in North America and Europe more competitive, and batteries in North America more competitive. And that is the sort of lever that, it's well beyond the scope of a mineral company. You know what I mean? Like,
through macro.
It is as macro as it gets. It's a global supply chain. Government's involved in trying to find a solution to this. It's that big. It's prime minister presidential level, right? Like, that's the conversation they're having today, is that. And so from our perspective, it's like, if it was completely open market, we're competitive. And all things else being equal, we'd be producing lithium into this industry, no problem. The current price out of China is not the real price and does not therefore reflect open market. And so if that's not open market, then you have to find a way to counteract that, because you have to create a market that is open. And I think that's a large part of what we're hearing from I had a conversation with the Prime Minister when he was here over Stampede, and that's what I heard from him, was that they're trying to create a local Western market that, counteracts that, I would say, in some fashion. And those are my words, not his, but that's what I'm reading through the situation. And so that's the level it's at. And so in the meantime, we know something's coming from that perspective. We know that they're going to put some things in place. What those things are, we have some view into, but we don't know for certain exactly what the mechanisms are going to be, but something is coming from that perspective, and it's going to help bolster Western supply, and it's going to level the playing field. And again, it's short term, right? I think eventually all of this stuff will normalize and we'll go back to normal markets, but that's going to be some time from now. So in the meantime, I think there'll be something in place to sort of keep it all level and enable projects like us to get built.
Fortunately, there is a lot of lithium in North America. How does the reserves compare to places like Australia and Chile?
Yeah, I mean, North America has, in terms of the projects that are being advanced today, if you sort of took them all and normalized them to get into production at a certain time, and then you took the demand for lithium, we're probably about 50% supplied in North America. So we still need more, and that's just a North American to North American comparison. So it's assuming that there's no input or output of lithium or batteries. It's just we are building only batteries from local supply, and we're only using those batteries in the local market. We need to double our capacity for lithium to meet that demand. Obviously, there are other sources that can come into North America that are, like China's lithium can still come in. The South American lithium could come in and be refined in North America. So there are other sources that are, it's an unrealistic scenario to look at, but it does paint the picture that we need more lithium in North America than we have today.
Do we have plenty within reserves? Yep. How much is there?
Yeah, I mean, Alberta has 72 million tons of lithium in resource. E3 has a 1.1 million ton reserve for lithium. And so that's significant. It's 20% of all of Canada's reserves in just our one project. We have 20% of all Canada's reserves. And that's one project. There's multiples of those that we built in just that one area. So there's
lots of lithium.
We have lots of lithium in Canada. It's not to be said elsewhere. Like, there's a couple other jurisdictions in North America, like Arkansas, Texas, and California, Salton Sea, that have lithium in brine form like this, but they're not as big as the Alberta opportunity.
And another reason the government's interested is because lithium development, like oil and gas development, benefits the people who live in the province and the country. You collect royalties and you create jobs. And so it's a win-win for everybody.
Well, yeah, exactly. I mean, it's a new industry. It's diversification because it's not tied to the price of oil in any way or price of natural gas. And so it provides an opportunity to put the same people to work, right? We're still drilling the same wells, using the same drill rigs, same skill sets for operators. It's a plant that, is automated, controlled, needs pipe fitters, needs all those things. So like the skill set in Alberta is 100%, I believe 100% perfectly transferable into the lithium industry. But it has a completely different market. So it enables you to build big operate these big projects, make a lot of revenue that is tied to royalties and taxes and wages, putting a lot of people to work. And then, as commodities shift in cycles and prices, which they always do, regardless of the commodity, you can weather those boom bust cycles a bit more normalized because you have multiple markets working for you and against you. So I think it's a great story for Alberta. I think that, it is really a matter of time at this point before these things are operating. And it's the Alberta story continues, I think, here with lithium. And at the end of the day, it's just another commodity that we've blessed with having in the ground, and that we can produce into something valuable to the world.
What's the most misunderstood aspect of early stage lithium investing?
I think grade is probably the biggest that we've faced, the biggest misunderstood. That grade of a deposit is important, but it is the cost and the normalized cost against that production that actually needs to be valued. So that's definitely one. I think, like, more general in outside, like, that's an E3 one. I think the uncertainty in the market is probably the biggest misunderstood, because it's complicated. You don't make a crude oil that you put in a pipe and it just goes to market. And I know I'm simplifying how that market actually works, but you look at the Alberta lens, nobody questions, the value of oil and where it goes and how it gets refined and where the demand is. And, you get a lot of questions on that with lithium because it's still new, right? We're still in the early stages of this industry, truly, right? And the battery industry is only getting bigger, and the use cases are only expanding. And in the next 10 years, this market will normalize, and it'll be more fundamental based rather than speculative based, and all of those things. That the volatility will calm down because it'll become much more robust sort of system of use case and end users and all that sort of stuff. So, but we're not there today. We're still in its infancy.
So as we head towards the end, what's one contrarian view that you hold about the lithium market or the EV transition, some would call it, that other people might disagree with you on?
Contrarian view? I come by this industry from a resource lens, but you can't avoid the tie to the electric vehicle because the EV battery is the price maker. They're the big consumer of batteries, the car market. And so a lot of the industry is priced against the size of the car market. I think that the EV is inevitable. That's probably the biggest contrarian view, especially in a place like Alberta. I think it's inevitable. Do I think it's tomorrow? No, I don't think it's tomorrow. But they're easier to build. They're cheaper to build. They're better cars from just a functionality perspective. I've driven an electric car for 4 years, and I first got one because I figured I should. Because I was talking, it was like 2020, 2021. And I was talking about them all the time, and I didn't really know what I was talking about. So I figured I should, I should drink the Kool-Aid a little bit more. And I can't go back. I mean, I have a camper that's gas, and I hate driving it simply because it's gas, and you press the pedal and it kind of revs up engine, and you're used to driving the electric car. You just push the pedal down and the thing goes, and it just continues to go until you take your foot off the pedal. And I can warm it up with my phone, turn on an app. I can cool it down. I can have it ready to go. I haven't paid, other than when we do long trips, I never think about a gas station because it charges in the garage. So I just I think there's just, especially in a place like Alberta, it's going to take a while before that adoption comes here and we see, those cars. So that's what I mean. I think it's inevitable. I just don't think it's tomorrow. Price is the other big problem. But the price problems is that challenge is being overcome in the next couple of years. You're going to see like Ford's big announcement about building the EV from a platform of EV rather than trying to build an EV from a platform of a conventional car, and how they're going to save significantly on the cost of building the car. And that's going to bring the cost down. There's just stuff like that. And that's Ford. I mean, arguably one of the biggest car makers, right? So, and they're talking about how they're having to redesign their like from first principles manufacturing process. So, but yeah, it's everything's coming. It's just it takes a long time, to convert and to change industries and stuff like that. But that'd probably be the biggest contrarian. Yeah.
And so, what message would you leave for investors heading into the fall of 2025 that may be listening to this podcast?
I think that there's a big opportunity for Alberta, and I mean, most of your listeners are probably locals, but also looking at the just investment in E3 and the broader, this is something that when you look at our profile, you look at all of the work we've done. We've been working on this for 9 years. We've just gone through our third bear market for lithium. We're starting to come out of it now. Mm-hmm. This E3 is just so well positioned to take advantage of the cycle that's coming, the policy that's coming from the government, both federally and U.S. federal. We are one of the most advanced in North America in terms of getting this thing to the market. So we've done all the right things. We've positioned this company to be able to build this thing, and I think that this is the next 12 months is really going to see this project solidify into something that's ready to start construction. And obviously there's a lot of pieces, as I mentioned, that have to go into that, but we're there. And I think it's important. I think, I'm excited. I'm excited to see this thing get built. I'm excited for to create a new industry in the province.
Mm-hmm. And shareholders can ride along with you. I think you're public on the...
We're publicly traded. ETL is the ticker. So I think, honestly, we're a very open company. We appreciate conversation. We appreciate reach out. So, e3lithium.ca, you can find all of our contact details there, and we answer emails or answer the phone. So if you have any questions, definitely reach out.
Appreciate your time today.
Yeah, thanks for having me on.